Hello everyone, this is Juan Sarmiento and today is Tuesday, March the 24th. Things are going well in my account. You probably noticed that I put quite a few bullish trades in the expectations that we will have a bounce, and I think this is only the beginning. You'd remember from the SPX my analysis that I'm projecting a retracement towards the Ichimoku cloud here. You can use that as an indicator. I use the Fibonacci retracement. That would have to be changed a little bit because the market went down a little further than expected. But that was my goal here. It went below it and now it's bounced well above it. And this candlestick pattern is called a rising star. It's the opposite of a cloud cover. It's called the rising star. So there you have it. We are looking for a retracement up to 61.8%, could be as little as 38.2% before the market continues on lower. But we need a reprieve before we can do that. So entering bullish trades will be appropriate for the time being, but you need to be nimble. You can't be complacent and let it sit there hoping that the market will go. It could happen, you know, you never know. It could form a double top. I doubt that very much, but you never know. This is a Elliott wave, corrective Elliott wave pattern usually comes back strongly, okay? So keep an eye on that. So I would move this Y here, and this will become an A wave of a larger magnitude. So I'm going to correct that, just so I can illustrate what my expectations are. It is a different wave of a larger magnitude, so let's put it 30. Okay, A, and then after A comes B. And that's what I'm looking for, a B wave. And all that means, you don't need to get too technical about it. It just means a bounce, okay? And then after that will be a C wave, so it's a three-way pattern, okay? There is no way of knowing by Elliott wave analysis how hard this is going to be, all right? So be cautious. All right, let's take a quick look at the monitor tab and see what we have. Click here on the P&L and see if we need to get out of anything. We have Boston Scientific, which is recovering, Raytheon and UNG. These were trades that I entered way too soon, okay? But maybe they will recover, who knows. The others are doing well. I see now Costco is close to 100, and that's a bearish trade. Qualcomm, let's check those two, okay? Qualcomm and Costco. So analyze QCOM. I don't remember. Yeah, that's a bullish trade, so we're fine with that. I'm not going to move it. As far as Costco is concerned, that's really looking good. There is plenty of room for it to bounce back and still give me my 100% return here. So I'm not going to touch that. So let's go straight in my trades for the day. They're all bullish trades, and they're diagonals. AMAT is one. Okay, let me just explain a little bit to you here. You see the volatility here. If you take an implied volatility chart, it's about 80%. That's a composite of all the options for this stock. So what I'm thinking is to, instead of entering a diagonal or a vertical, I'm simply going to sell puts. Okay, those puts are very rich right now, so it makes sense to sell them, sell puts, and then you can get not only the credit you receive, but you essentially end up with a stock if it ends up below the strike price. Okay, so here we have 45 put, and currently is at 44. And our break-even point is way down here at 40. So I say that's a very good deal. All right. So make sure that the volatility is high. In this case, this particular option that I'm selling is about 76%. So make sure you enter that at a high probability. And also don't go with those stocks that have 100, 150, 200 price tag. Keep it low, because essentially you're buying the stock. When you sell a put, you're essentially buying the stock. So you don't want to end up with a stock that goes from 20 to 10 and lose you all that money. So that's all I have to say. Let's just enter. I am selling plain puts. I could buy a lower strike price put, but that is going to be expensive too. All right. So my game here is to sell the put. Is all these $4.30, I think, is all out of the money. Let's say go to add simulated trades, look for the May 45 put here, and you see that you can select here the extrinsic and intrinsic value. There you have it. So the extrinsic value is $4. So essentially we are getting $4 for free. We are only paying 30 cents for that option. See that? Okay. The intrinsic value is $2.36. You can, here we are. Here the extrinsic value is actually $5.16. There's no intrinsic value. Okay, so that seems to be a great deal. If the stock closes above 45, then I get to keep all that money. So let's do that. And essentially you're buying the stock at a $5 discount, if you want to put it that way. Okay, that is AMT. I have other here, INCY. And in this case, I'm entering a diagonal. Again, when you enter a diagonal here, like I have, you have two volatilities there. And of course, you are selling the high volatility and selling the lower of the two. And in this case, I'm doing this diagonal for a price of $232. No, yes, $232. That's my maximum risk. And I could make as much as $300. Okay, that seems like a good deal. The good thing about the diagonals is that you can switch them around and transform it into bearish trades, if need be. If we are in a hurry, you can transform it into a bearish trade very easily, with a single trade. All right, that's you can see the YINCY is I'm selling the May 15 and buying the June. So it is sort of a calendar because you're buying the back month, but because of the difference in strike prices, it resembles a vertical as well. Okay, let's go to NTAP. That's another diagonal here. All right, and I am selling the May 15 of May, I guess, is the expiration, and the strike price is 40 puts. So I'm selling that put, and I'm buying the lower strike price. And this is what it looks like. It's a bullish trade. Bullish and neutral, because if it would not move at all, or if it would move down $1 or $2, you could still make some money. Hopefully it will land. If it lands in the middle, then fantastic, you make the most. But usually what happens is you see it go to the top and then bounce back down a little bit, and if it lands in this area, you get the most profit. Okay, so again, I'm risking $300 to make 282. Confirm and send. And my last one is PA and W. Folks, there is a lot of trades that I could be making. So I've been very selective, picking those stocks that I think are good for this situation. Make sure that the volatility is just right, but I have huge number of candidates. This bounce has been very generic, so still you need to be selective. So if you have other stocks that you want to trade because they look strong and you like them, you should be able to enter some diagonal. Okay, in this case, I am buying the 155 calls, May 15 expiration, and selling the May 1st expiration, 160 call, a higher strike price. And as you can see, I'm risking $417 to make $493. Okay, again, make sure that the volatility makes sense. In this case, actually, it's not so good because I'm selling the lower volatility, but they're very close enough. And let me see. This must have changed after the close because I think it was more favorable. Let's see, $442, that's a little too much. So I'm gonna pass after all on this one, okay? I mean, unless I can do it better with the puts. Oh yeah, that's much better. Okay, you see the volatility difference? So let's do it with puts. It makes no difference. It looks the same, but the volatility is more favorable here, and I'm risking $415 to make $476. It's a little above my 1%, but I'm feeling good about it, so I'm not gonna enter all like that, but that looks good. Okay, folks, so let's go here to the analysis. So far this year, the account has grown by almost $6,000. Not bad. Okay, so remember we started. So 6,000 divided by 30 is 20%. And this is only March. Now, in reality, let's be judicious about this. We started the account with $30,000 back in October, I believe it was. Okay, and the account is right now at $34,769. So that's our profit. Okay, that's our profit there, and I'm going to divide that by 30,000. And that's an increase from the beginning of almost 16%. Not bad, huh? Okay, so things are working very well. All right, so I hope that gives you some faith in what we're doing here. And so let me know what you think. I'd like your opinions. Are you surprised with the increase? Are you scared that perhaps doing bullish trades is a bad idea with the bear market in full bloom? Or are you do you believe, like I do, that we're going to have a little bit of a bounce? It would be interesting to see the general opinion. So please share your thoughts. Thank you very much for joining me, and I'll see you tomorrow. Bye-bye.
For this video, please be sure to subscribe to this channel by clicking on the subscribe button below. Once you have done that, be sure to also click on the bell so you get a notification of future videos coming up in this channel. Be sure also to click like if you enjoyed this video, and feel free to share it with your friends and family. Thank you very much. Don't forget to visit www.putgoldgenie.com Then go and subscribe. You could simply subscribe as a visitor. It is free and you would have access to several videos of interest for traders. You would be directed to this registration page. It is free. Once you have subscribed as a visitor, feel free to go to the tutorials and select the free videos. These are videos of general interest for all traders. Thank you very much.